Module 2, Learning Objective 8, Preparing Financial Statements. So to prepare financial statements, what we want to do is record all the transactions and adjustments. We could do them in this template, but in reality what we would do is we would actually do this in the general ledger, in the computer. And you would add up the balances of all the accounts. And we would use this information to prepare the financial statements. So you'd have something, after you add all these up, with the accounts totaled, you would have something called the trial balance. And the trial balance would list all the debits and the credits. And then you would, of all of your accounts. And then you would use the trial balance to prepare your financial statements. So you would start off with your income statement, that would be 1. And you record your revenues, your cost of goods sold, expenses, all the various items, provision for income taxes, any dividend, discontinued operations. Then you'd prepare your balance sheet. No, you wouldn't. This is out of order. Then you would prepare your statement of stockholders' equity. That's 2. Then you would do your balance sheet. And then you would do your statement of cash flow. You always do your statement of stockholders' equity before you do your balance sheet. I'll show you. So here's your income statement. And you get all these numbers off the trial balance. And if you're going to use this financial statement effects template like they do in the book, then you use it. It's the last columns, the last 3 columns on there. The retained earnings statement, which is part of the stockholders' equity statement, retained earnings would be beginning retained earnings plus net income minus dividends equals ending retained earnings. Now that you know ending retained earnings, and if you do a whole stockholders' equity statement like this, you'll not only know retained earnings, but also common stock and accumulated OCI. And then you use that information to prepare your balance sheet. And then you do all this to prepare the cash flow statement, which is really outside the scope of what we're doing today.